Hi there, welcome to my channel. Well, here's an update on my portfolio. As you guys can see, we're at $299,140 here on my dividend tracker. It's called Stock Events. And as you can see, we are making about a little bit over $69,000 on an annual basis. And on a monthly basis, just a little bit over $5,700 per month. Keep in mind, these are all estimations. And of course, my major goal is to get to $10,000 in dividend income. And so if we look at this analytics here, this here estimates that I should reach $10,000 per month in about 2 years, 2 years and 13 days. So I'm about 57% of the way there. So that's what I'm moving towards. My goal of reaching $120,000 on an annual basis. That's my goal. And so as you guys know, I've been using various ETFs. Most of them have this one thing in common. They all pay dividends. And so they either pay on a monthly basis or they pay on a weekly basis or even on a quarterly basis. Okay, so today I'd like to talk to you guys about the Roundhill ETF. I know you've heard about it. I spoke about it in my previous video. It's WPay, a very anticipated ETF. Weekly pay ETFs, right? Roundhill has this whole list here of weekly pay ETFs based on single stocks. So as you guys can see here, it's Roundhill Weekly Pay Universe Fund. That's the one that was in high anticipation. Everybody was waiting for it, and now it's available. You can buy it on Robinhood. It says WPay provides equally weighted exposure to all single stocks, weekly pay ETFs. Okay, so this one ETF, WPay, will contain all of these ETFs in equal weight or in equal amounts. And so if we look here, this is WPay Weekly Pay Universe ETF. And so this ETF will contain all of those other ETFs. And so if we look at the description of those other ETFs, let's go look at probably one of the ones that I like the most, NVIDIA, which is NVDW. Okay, so if we read the description here, it says NVDW seeks to pay weekly distributions to shareholders while targeting enhanced returns corresponding to 120% of NVIDIA's weekly performance. Okay, so in this description, if NVIDIA moves up, this ETF is going to move up. If NVIDIA does 10% in one day, this ETF, NVDW, will do 12% in a day. So it's going to actually outperform NVIDIA because of that 120%. All right. So as you guys can see here, it pays a really, really high distribution of 44.35%, which is really good. And let's look at this overview here. The Roundhill NVIDIA Weekly Pay ETF is designed for investors seeking a combination of income and growth potential. Okay, so that's very important, what it says right here. Okay, it's for investors who are seeking a combination of income and growth potential. Okay, NVDW aims to provide weekly distributions and calendar week returns before fees and expenses equal to 1.2 times or 120% the calendar week total return of NVIDIA common shares. NVDW is an actively managed ETF. Okay. This is also very important. It says there is no guarantee that the fund will successfully provide returns that correspond to approximately 1.2 times the calendar week total return of common shares of NVDA or NVIDIA. An investment in the fund is not an investment in the underlying stock. Okay, so like I mentioned before, if NVIDIA, the stock, shoots up by 10% in one day, this ETF, NVDW, will shoot up to 12% in one day, beating the underlying stock. And of course, if NVIDIA drops down by 10%, if it goes negative 10%, then this ETF will go negative by 12%. So it'll fall further. Okay. But of course, the objective is both growth and income, right? So they're trying to provide you with both growth and income. And so since WPay is going to contain all of these ETFs, it's going to be diversified, and all of these ETFs have the same objective of producing both growth and income. So for me, I'm holding the single stock, like something like this, like NVIDIA, which is currently the number one stock. If we look at the S&P 500's top 10 holdings, NVIDIA is the number one holding. And so I figure it's fairly safe to hold anything that's in the top 10 of the S&P 500, which would be NVIDIA, Amazon, and various other stocks that are the top 10 in the S&P 500. NVIDIA is also in the NASDAQ. I believe it's also in the top 10 of the NASDAQ. And so this is the objective of this ETF. And so I assume it's also the objective of the of WPay. Okay. Where do we find WPay? We find it in here, I believe. Yeah, here it is. So since the objective of all these different ETFs is to give both growth and income, I'm assuming that the objective of WPay is basically the same, right? It's going to give you both growth and income, and it's going to hold this list right here of ETFs. And a lot of these ETFs are in the top 10 of the S&P 500. For example, Google, Apple, Amazon, Meta, Tesla, Microsoft, and let's look at the full list. NVIDIA, and yeah, those are the ones that are in the top 10 list of the S&P 500. And so when we look at a comparison, because lots of people are now comparing, and what's better, YieldMax or ROUNDHILL. So it's YieldMax versus ROUNDHILL. And so YieldMax and both ROUNDHILL have a lot of the same single stock ETFs, although YieldMax has more. So YieldMax already has I guess you can call like a universe of ETFs, which is YMAX, which I own YMAX. And if we look over here at at their website, let's go to their website right here. The objective of this ETF, NVDY, the YieldMax NVIDIA Option Income Strategy, it's totally different. It's not the same. Okay, their objective is different. And so if we read here, it says the fund's strategy. Okay, so this is very important. The fund's strategy will cap its potential gains if NVIDIA shares increase in value. Okay, so that's very important here to understand. The fund's strategy will cap its potential gains if NVIDIA shares increase in value. Okay, and the likelihood of NVIDIA increasing in value, even from today moving forward, I assume it's very likely. I assume it's very likely that NVIDIA will continue to increase in value. And so NVDY is capped, right? So let's keep reading. It says the fund's strategy is subject to all potential losses if NVIDIA shares decrease in value. So that's another very important point there, that all of the losses, right? So every time NVIDIA takes a dive, NVDY will take a dive, and the upside is capped, right? So it's going to take on all of the losses, and there is no upside, right? There is no upside with this. So that's very important to keep in mind. And so it says here, if NVIDIA shares decrease in value, which may not be this is also very important. It says, which may not be offset by income received by the fund. The fund may not be suitable for all investors. Okay, so that's very important. It says, which may not be offset by income received by the fund, right? So the income that this ETF produces may not be enough income to offset the downside of this ETF, okay? Now, of course, the distribution here is very high. It's higher than the Roundhill version, okay? This one's 66.28%. And so now if we go to my actual Robinhood portfolio here, and we look at NVDY, let's open this up. Let's go back to here. And so here it is. This is the Roundhill version. So keep in mind, here on Robinhood, it doesn't take into account dividends reinvested. So this line chart doesn't take into account any dividends reinvested. And so this is the past week. This is the past month. This is the past 3 months. And this ETF hasn't existed for that long. It's, 3 months, a little bit over 3 months. So within the past 3 months, this ETF is in the green, 2.29%, or $1 up. Besides being $1 up within 3 months, it has also paid dividends, right? So if we scroll down here, I don't really know how many dividends I've received. I only own a small amount of this. I don't own a very large amount of this. I own more of the YieldMax version of this ETF. So as you guys can see, in August, it's basically, I bought it in July, but I've owned it through August, and now I own it, in September I own some. So as you guys can see, it's consistently paying dividends. Let's look at this one. It's paying, it paid on Wednesday, it paid 43 cents per share, okay? 43 cents per share. And so if we look at the YieldMax version of this ETF, let's take a look at the YieldMax version. We just change that W into a Y. And as you guys can see, I have a lot more shares here. I have 422 shares, okay? I'm in the red currently for $214 right now. So if I sell this now, I lose money. Okay, in the past 3 months, this is only up 0.50%. So without dividends reinvested, by comparison to the Roundhill version of this, this is only up 0.5%. The Roundhill version of the same the same kind of the same NVIDIA based ETF, you guys saw it. It was up 2.29%. Okay, so one of these is going to outperform the other, right? Because the other has a different strategy, and the other one, as we read what its objective is, in the objective of the Roundhill version of this ETF, the objective is growth and income. Okay, the objective of this ETF, this one from YieldMax, is just income. I mean, just income, and that's it. And it's going to cap its upside. It's going to take on all of the downside. So, which one is better? Which one is better to own, right? If you've got one that does have some amount of upside, right? It's got the potential to capture some of the upside. And the Roundhill one has the potential to capture some of the upside and pay you something. And this one really doesn't have any potential to capture any of that upside because it's capped. I mean, it may get some of it, but it's capped. It has a limit. And it's going to really capture all of the downside, right? Both of them, if NVIDIA goes down, both of them will go down, right? The Roundhill one will go down and the YieldMax one will go down, okay? Now, in that scenario, which one has a better chance of recovering its value, right? I guess that's the question. Which one has a greater potential to recover its value? I'm starting to think personally that the Roundhill version of the NVIDIA options ETF has better potential for recovery, right? The Roundhill one. Because the Roundhill one is going to do 1.2 times the upside, you know? So if NVIDIA drops and NVDW will drop, NVDY will drop, okay? And then once NVIDIA starts going back up again, that's the question, is which one of these will capture more of that upside? And so personally, I believe that the Roundhill version will capture more of the upside, okay? This one is 25% margin maintenance, which is really good. And the Roundhill version of this is 30% margin maintenance, which not too bad, you know, not very different from the YieldMax version. And so I also believe I have a comparison here of all three of them. Let's see a comparison here. NVIDIA. We'll do a comparison of NVIDIA and then a comparison of NVDW. And how about we add the actual stock in there, NVIDIA, the NVIDIA stock. Okay, let's do a comparison of that. This is a 1 year comparison, okay? As you guys can see, in the past year, the actual stock is the orange color. So it's 54.69% up, right? The NVIDIA one, the YieldMax one, is 37.11% in the green, while the Roundhill version is only up 19.02%. All right, so currently, in the past year, NVIDIA is outperforming NVDW, but NVDW hasn't been around so long. So if we go back, let's go back to year to date, okay? In the year to date, we can see that NVDW is outperforming the YieldMax version. If we go back 6 months, let's see if this one's, yes, okay. If we go back 6 months, okay, as we can see here, NVDW is actually outperforming NVIDIA, while the YieldMax version is way lower. And this is with dividends reinvested on both of them, okay? So, yeah, that's the thing, you know. If we look at the long-term record here for NVIDIA or NVIDIA, the YieldMax version of this ETF, this 3 months, year to date, 1 year, 5 years. Okay, so as you guys can see, it's been gradually losing its value, and this is without dividends reinvested. So without dividends reinvested, it's down almost 30% in the past year. Okay, and the actual stock. Let's look at the actual stock of NVIDIA in the past year. Okay, so as you guys can see, this is the major difference here, right? In the past year, NVIDIA is up 58.19%. Okay. So let's look again at NVIDIA from YieldMax, and we'll do the same here, the 1 year. Okay, see, as you guys can see, without reinvesting dividends, yeah, this doesn't look so good, right? Without reinvesting dividends. So whatever you put into this ETF, you're gonna lose value. And I mean, you have to reinvest dividends. I mean, you must reinvest dividends. By comparison, there's something that I own where I haven't reinvested any dividends. Okay, and well, I don't reinvest dividends. I haven't reinvested dividends in any of the ETFs that I hold. But let's look at one that has been doing very well for me, and I haven't reinvested any dividends whatsoever into this ETF, which is QQQI. And so as you guys can see here, if I sell QQQI today, I make a little bit over $4,200 if I sell this. Okay, so it has appreciation, both income and price appreciation. If we look at 1 month, we're up. 3 months, it's up almost 4%. Year to date, it's up a little bit over 1%. In the 1 year, it's up almost close to 8%. 5 years, well, there it is. It hasn't existed for really that long. 1 year is it's a little bit over a year old, right? And it's up 1%. Keep in mind, this here doesn't include dividends, okay? This does not include any dividends whatsoever. If we look at the line chart with dividends reinvested, of course it's going to be much higher, okay? And so this is something that I've invested in. Pays great dividends. It has appreciation, right? The price goes up. And these are the dividends that I've made so far from this ETF. These are the, these 3 payments are the largest, for June, July, and August. Just a little bit over $1,200. Okay, so apart from the appreciation of the value, this thing has already paid me like close to $4,000 in dividends. And so this is actually really paying me, right? I could take this almost $4,000 in dividends, and the price of QQQI is still positive for me. It's still in the positive. Same thing with SPY. Same deal, right? It's almost $4,000 in total return for me. And it's paid me about $1,000 a month. So I've made $3,000 from owning SPY. Okay. So there's kind of like this difference, I guess, with all these ETFs, right? On one hand, you got ETFs that have really high yields, but because the yield is so high and the upside is capped, the value is going down, right? The value is declining. And then you got ETFs like SPY and QQQI, right, where they're doing covered calls also, but they're selling them further out of the money. So some of it is capped and some of it is not capped. I believe that maybe they're even not selling calls on a portion of the portfolio. So that means that, some of it is going to, if the S&P 500 goes up, SPY is going to go up, right? So it's got both income and growth. And so the new Roundhill ETFs, as we read in the description, the objective is both income and growth. And so I don't know, those Roundhill ETFs sound like maybe they're possibly better than the YieldMax ETFs. Even though they're a little bit newer, but because their objective is both growth and income, and that's what they're going to do. They're going to grow and they're going to pay you something, right? Which sounds far better than no growth and just income. So that, gets me to thinking that maybe these ETFs, for example, down here, like especially the ones at the very bottom, and most of them that are in the bottom now are from YieldMax, okay? Most of them, not all of them, but most of them. And they've lost value, especially this one, Ulti. It's lost a lot of value. It pays a very large dividend, but as you guys can see, if I sell this now, I lose over $2,000, right? And it hasn't covered the cost of that loss, even though I haven't really lost anything because I haven't sold it. And so, yeah, it kind of gets you to think like, well, maybe I'd be better off buying the Roundhill ETFs and concentrating more of my money and more of my efforts on buying ETFs that have both growth and income. Even though they may pay a smaller dividend, still, I think it's superior to have both growth and income. Okay, that's my opinion. None of this is financial advice. Well, thanks so much for watching. I really do appreciate you guys watching my videos. Please do me a big favor, like, share, and subscribe to my channel. I really would appreciate it. You guys have a good weekend. Catch you in the next video. God bless. Bye.